Hello and welcome. Today is Friday. Happy Friday, y'all. January 30th, 2026. And this is your daily sigh of relief. If you're an entrepreneur trying to keep up with what actually matters, this is for you. Great big deep breath in and let it out. I want y'all to feel like, man, when I watch Cosm, I actually know what's going on in the world of business and entrepreneurship and AI and all that fun stuff, which is the promise. I go live every single business day at 6 p.m. Eastern. That's right now. And to the best of my ability, I give you everything that you need to know across AI, business, markets, platforms, policy, all hopefully in 15 minutes or less. If we haven't met, my name is Cosm. I'm a welfare baby turned self-made multimillionaire, and I help entrepreneurs who already have a real business, that's you, but want clearer steps, better tools, and smarter ways to grow in a post-AI world, that's now. And all of my content is and always will be free. My goal in life is to help you achieve your definition of freedom. Get the Daily Sigh delivered directly to your inbox by going to dailysigh.ai. Let's dive in. Our first story of the day, of the evening, if you will. Amazon eyes $50 billion investment in OpenAI to control AI infrastructure. This doesn't feel like a small business story on the outset, but the reason that I think it's so important for all of us to pay attention to is we're starting to see the statecraft at play. We saw a Google-Apple partnership with Apple relying really heavily on Google AI for Siri, which is there's a old World War I, pre-World War I alliance. If you remember from history class, what went wrong with World War I was you had all of these superpowers or pseudo superpowers with newly acquired technology that they'd never used, just itching to get into a fight, and they started papering up alliances, some of them secret, some of them not. And then when some dude got shot in the head, some Austrian prince or whatever, there was a domino tip in a bunch of directions where everybody got dragged into the fray. That, as an analogy, I think plays out pretty well here. You're starting to see, instead of countries, you're seeing corporations beginning to build alliances based off of what feels like the most symbiotic or at least threatening framing. And so Google and Apple have played together a lot. Very, what would you call it? There's been a lot of friction about it. Apple tried to take Google Maps out and back and shoot it and couldn't, and then came back like a whipped dog. And Google took them back because Apple has such an extraordinarily valuable user base. Well, here we are watching Amazon offering $50 billion to OpenAI, which would increase OpenAI's valuation $830 billion, which puts both OpenAI and Anthropic at about $1 trillion valuation. And this is interesting because Amazon was playing with Anthropic, and now they're playing with OpenAI. As a small business, you need to pay attention to your technical infrastructure. I'm deep in Google. I use Google Apps for everything. So does, pretty much every business I own, to be frank. And so changes like this, shifts like this are really relevant to how I do business and will continue to be really relevant to how I do business. I think the same is true for you. No matter what you're doing or where you're going, start paying attention to, who holds the keys to your kingdom? I don't know if any of y'all have ever been on the receiving end of, and I'm sure you have if you've been in business long enough, a major shift in who owns your technical infrastructure, but it can be catastrophically damaging. So just pay attention. I also think it's just such an interesting play because what Amazon just did by going deep with OpenAI is they kind of got in bed with Microsoft inadvertently, which we'll talk about here in just a second. Story number 2 comes from Morning Brew. Market punishes Microsoft while rewarding Meta's AI spend. Microsoft shares dropped by 10%. It's the largest dip in 6 years. It'll raise $350 billion in value. This is due to investor fears over unproven AI infrastructure costs. This goes back to a previous story that I reported on, which came from, I don't remember where the article was, but it was an MIT study that found that 95% of all AI infrastructure investment has yet to prove an ROI. 95% of all AI infrastructure investment has yet to prove an ROI. Microsoft looks to be one of those folks. In contrast, Meta shares have climbed 10%, and that's because of 24% revenue growth. Morning Brew says that this is driven by rock solid ad business. Y'all, I got to be honest, I am short on Meta's ad spend business. I think that Meta has optimized itself into an extreme bottom of the funnel paradigm. When you go to Meta and you pay for traffic, you're paying for, it's the worst kind of traffic to pay for as an advertiser. You're paying for your own traffic, so remarketing and brand traffic. You're paying for people that have been more or less stolen from your competitors, but you're paying an absolute premium for it. Um, Meta has moved away from what I think should have been its bread and butter, which is the top of the funnel traffic, awareness building type traffic. And so, revenue's growing, but at the cost of it eating its advertisers' margins, and advertisers aren't going to be able to do that for very long. So I think that Meta's approach to their ad network is very, very, very short-sighted. And I would anticipate this not lasting very long. That's my soft opinion. We'll see what happens. Apple reports record $144 billion first quarter revenue. This is crazy given that Apple doesn't have its own freaking AI infrastructure yet, and they're relying on Google. So we'll see where that goes. Apple still has the most valuable consumer base in the whole wide world. A story from Inc., really worth paying attention to. Skilled trades are, according to Inc., an AI-proof growth industry. AI-proof, I think, is a bit of a stretch with Elon Musk building 1 million robots this year. But the physical infrastructure maintenance is growing exponentially and remains resistant to digital automation. That's a quote from Inc. And I think it's true. If you're looking for a business to buy or a business to get into, skilled trades would be one of them. A buddy of mine, I don't know if I should say his name. He's one of the largest employers in the state of Arizona. He's in the trade space. And I remember him telling me how hard it is to find really important roles like journeyman carpenters. And so, if you're hunting for opportunity, that's a really, really good place to be. An article from Inc. that I absolutely disagree with. Inc. says vibe coding exposed as marketing ruse. The concept of vibe coding was largely a tactic to sell AI tools, reminding founders to value real technical depth over hype. Not true. Vibe coding is the death of all things SaaS and subscription. I imagine Inc. is in bed with a lot of those folks, which is why they're offering you that absolute bullshit line. If you're not playing the vibe coding game, I think you're missing out massively, massively, massively. It's extraordinary. I own a free vibe coding incubator, incidentally. It's vcinc.ai. It's absolutely free to you to learn. There's over, I think we're approaching 2,500 members in the free incubator. Go check it out and play with it. When you see what's possible, you can erase entire software stacks that you've been paying years for. It's the reason that articles like this are being published, because they're trying to buy themselves time. An article from Entrepreneur magazine: Southwest scraps open seating after 54 years. The airline is sacrificing its most iconic brand promise for revenue efficiency through premium assigned seating. The thing that I think this is really important here, the reason I'd highlight this for small businesses, because what I would encourage you to do is not get romantic about how you make your money. I don't have a strong opinion on whether or not open seating is better, but what I do think is important is that Southwest is looking at monetization opportunities, even if it means, kind of eating a little bit of crow and admitting they were wrong, or backpedaling on something that customers loved. So, like it or hate it, it's necessary. I think this is just the good lesson here is that we should all look at some of our sacred cows, and sometimes, especially in really unsure markets, sacred cows need to get slaughtered. An article from Business Insider: new iChatGo Web3 search engine launches. This is an AI-driven tool and addresses fragmented data silos in the Web3 ecosystem. I don't know what to think about this, to be honest with you. I haven't really played it much, other than I think we should all pay attention when things like this launch. Because if you're early to capturing market share when it comes to stuff like this, then you benefit massively. Imagine being early to optimizing for Google back in 2004. So go check out iChatGo. If you're not playing in the Web3 space, I don't blame you. I'm not either, because I don't understand it at all. But I know that it's supposed to be where we're all headed on a long enough timeline. ExxonMobil announces $28.8 billion full-year earnings. The energy giant hit a 4-year production high, demonstrating continued power of legacy energy in a tech-heavy market. I'm long on oil, long on oil. If you want to lose money with me in the stock market, go buy some oil, because I am. I learned recently gold hit 5,500 an ounce and then dropped, but it's still above 5,000, I think, unless something's changed in the last couple of hours. And I was talking to AI about it, and what's interesting is an ounce of gold used to buy 20 barrels of oil. Right now, an ounce of gold buys 80 barrels of oil, which means either gold is massively overvalued or oil is massively undervalued. And I realize correlations and causation and all those fun statistician cliches, and I think that that's worth paying attention to, because they're two of the most important economic indicators from commodity perspective. So I don't think gold is overvalued. I think that this is a response to a lot of things coming, like 40% of the money that exists in the world was printed in the 2 years after COVID, which is just insane that we allowed that. And now you're seeing, and not just now, I mean, we've been seeing it in the price of property and the runaway inflation and all those things. And so pay attention to gold, pay attention to oil. I'd also start paying attention to consumer debt. especially if you're in the e-commerce space. These are, you might think like, oh, macro trends don't impact me. I promise you they do. I promise you they do. Last news article, ANI News, India launches IAIRO for sovereign AI research. This institute will focus on domain-specific compact AI models rather than monolithic general-purpose ones. The reason I thought this was relevant is because I like the idea that AI is going to start getting niche-y. I think niche AI is going to be extraordinarily valuable, especially for things like cancer research or early childhood education, stuff that requires deep dives. I love that we're moving in that direction, and the type of research that's being conducted, I think, is going to be really impactful for a lot of small niche businesses and corridors. That's it for my news. My closing insight to the current market movements highlight a critical divide between the quote plumbing and the product. Amazon's bid for OpenAI shows that big tech is in a war for infrastructure, which is absolutely true. Microsoft's stock tumble proves that building the plumbing isn't enough. I think Microsoft, to be honest with you, is going to be fine. I think they invested a ton in infrastructure, and you're going to start to see the flow. The stock price drop in Microsoft is just a reflection of how fickle the sentiment or the consumer environment is. The fact that we want quarterly earning reports, you know what I mean? Like, that's not the way that business is done. That's not the way money is made. So if you tuned in live, I appreciate you very much. I see Duncan, Hycog, Riley, I'm sure I mispronounced that, Alfred, George, Sobe Knights, Bimarji, 8 Outlet. I'm butchering all this, but I love y'all and I appreciate you. As I mentioned, I go live every single business day at 6 p.m. Eastern. And my hope is that I can give you a sigh of relief, that after listening to this for just 15 minutes, you feel caught up, like you actually know what's going on, and maybe equipped to take some action. Tech time, I forgot. I wanted to share something with y'all that was actually shared with me today. Shout out to my buddy Marcus Highcutter, absolutely brilliant entrepreneur, and he shared pickle.com. Pickle.com is, they've created this operating system that remembers everything and understands you entirely, according to them. That's on their website. So it's one space for every piece of data. It imports your Gmail, your ChatGPT, your Slack, your Notion, your Claude, your Notes, your Messenger, your calendar, your Drive, et cetera, et cetera, et cetera, et cetera. And then it puts it all together in order to kind of create like Tiago Forte's second brain. But it does so automatically. I'm not a Pickle affiliate at all. I actually haven't really started using it outside of being exposed to it this morning and then doing a deep dive in as much as I could before I had to prepare for this call. But one of the things I want to do on these calls is just bring tools and technology to you. So I'm going to go play with Pickle. I'll play with my Pickle. You go home, play with your Pickle. And then we can come back together and have a whole bunch of other horribly pathetic Pickle euphemisms. Given that I'm 40 years old, you think that I would stop with jokes like that, but they're still hysterical to me, which probably means deep-seated trauma. I love you. I mean it. Thank you so much for watching. Happy Friday. I hope you have an extraordinary weekend. Remember that you are a literal miracle and that you're a manifestation of God.